Hey there, all you home gamers and market mavens. Welcome back to the channel because it's time to talk about building serious wealth over the long haul. Forget about trying to time the market or chase the latest meme stock frenzy. That's a sucker's game, and you'll get burned faster than a rocket pop in a heat wave. We're talking about planting your flag in companies that are built to last, the kind of rock-solid businesses that your grandkids will be thanking you for owning. We're gonna break down the best stocks for 2025, and trust me, these aren't your Uncle Morty's tired old picks. We're talking about innovative companies, dividend aristocrats, and financial powerhouses that are shaping the future. Now I know what you're thinking, long-term investing sounds about as exciting as watching paint dry. But let me tell you something folks, slow and steady wins the race. We're going to look at growth stocks, dividend payers, value plays, and those blue-chip behemoths that are the backbone of the market. By the end of this video you'll have a game plan that's built for the long haul. One that will weather any storm and have you retiring in style. So buckle up, because we're about to dive deep into the world of long-term investing, and trust me, you don't want to miss this. Alright folks, let's kick things off with a company that's been on fire. And I'm not just talking about the scorching performance of their chips. I'm talking about Nvidia, the undisputed king of the graphics processing unit, or GPU, market. These aren't just for making your video games look pretty, folks. These chips are the brains behind the artificial intelligence revolution. We're talking self-driving cars, cloud computing, machine learning, you name it. Nvidia's chips are the engine powering it all. Now I know what you're thinking, Jim, this stock has been on a tear, isn't it too late to jump in? Let me tell you something, when you've got a company with a moat as wide as Nvidia's, a company that's at the forefront of a technological revolution, there's always room to run. Sure, you might see some pullbacks, some profit-taking along the way, but those are just buying opportunities, folks. Remember, we're playing the long game here, and Nvidia is a stock you want to own for the next decade, not just the next quarter. They've got the leadership, the innovation, and the market dominance to keep crushing it. Now let's talk numbers, because at the end of the day, that's what gets us all fired up, right? Nvidia's stock has been on an absolute tear, up over 243% in the past 5 years. That's the kind of growth that turns a modest investment into a life-changing sum. And the best part is, this is just the beginning of the story. Think about it, folks, we are still in the early innings of the AI revolution. Every industry, from healthcare to finance to manufacturing, is going to be transformed by this technology. And who's at the heart of it all? That's right, Nvidia. They're supplying the picks and shovels in the AI gold rush, and believe me, there's plenty of gold to go around. Now, I know some of you are worried about volatility. After such a massive run-up, surely a correction is coming, right? Well, maybe not. But here's the thing, even if NVDA pulls back, it's not going to stay down for long. This is a company with real earnings, real growth, and a real future. Don't be scared to buy the dips, folks. In fact, embrace them. That's how you build a truly massive position in a generational winner like Nvidia. Let's talk about Nvidia's competitive advantage for a second, because in the world of investing, a moat is everything. It's what protects a company from the competition, what allows them to maintain their pricing power, and what ultimately drives long-term shareholder value. And let me tell you something, Nvidia's moat is as wide as the Grand Canyon. They've got a massive head start in GPU technology, years of research and development behind them, and a loyal customer base that includes some of the biggest names in tech. We're talking Google, Amazon, Microsoft. These guys aren't going to trust their AI ambitions to just anyone. They need the best, and that's Nvidia. But it's not just about the technology, folks. Nvidia has also built an incredible ecosystem around its products. They've got software platforms, developer tools, and a whole network of partners that rely on their chips. This makes it incredibly difficult for competitors to catch up. It's like trying to build a car without wheels. You're just not going to get very far. So, what's the bottom line on Nvidia? This is a company that's firing on all cylinders, a true leader in one of the most important technological revolutions of our time. They've got the growth, the earnings, the moat, and the vision to keep delivering market-crushing returns for years to come. Now, I'm not saying it's going to be a straight line up. There will be bumps in the road, there will be pullbacks, but that's just the nature of the market. Don't let those short-term fluctuations scare you off. Remember, we're long-term investors here, and Nvidia is the kind of company you want to own for the long haul. So do your own research, folks, but don't overthink it. Nvidia is a no-brainer buy for anyone who wants to profit from the AI revolution. This is a stock that should be in every growth investor's portfolio. Don't miss the boat on this tech titan, because this train is leaving the station, and it's not stopping anytime soon. Alright, all you dividend dynamos out there, this next one's for you. We're talking about a company that's about as steady as they come, a true blue-chip behemoth that's been paying and raising its dividend for, get this, over 60 years straight. That's right, folks. I'm talking about Johnson & Johnson, the healthcare giant that's as reliable as the sunrise. Now, I know what you're thinking, Jim. Healthcare? That's about as exciting as watching grass grow. But let me tell you something. When it comes to building long-term wealth, boring is beautiful. We're talking about a company with a rock-solid business, a fortress balance sheet, and a commitment to returning cash to shareholders that would make even the most demanding income investor drool. Johnson & Johnson isn't some fly-by-night tech startup with a fancy app and a dream. They're a global powerhouse with a portfolio of iconic brands that are household names. We're talking Band-Aids, Tylenol, Listerine, the products that have been staples in our medicine cabinets for generations. They're also a leader in pharmaceuticals and medical devices, so they're not just relying on consumer products. This diversification is key, folks. It means they're not dependent on any one single product or market for their success. Now, I know what some of you are thinking. Didn't Johnson & Johnson have some legal troubles a while back? Well, yes, they did. But you know what separates the great companies from the rest? It's their ability to weather the storms, to learn from their mistakes, and to come out stronger on the other side, and that's exactly what Johnson & Johnson has done. They've addressed those legal challenges head-on, they've restructured their business to focus on growth areas like pharmaceuticals and medical devices, and they've emerged as a leaner, meaner, dividend-paying machine. This is a company that's built to last, folks. They've been around for over 135 years, and they've seen it all. Recessions, wars, pandemics, you name it, they've been through it and come out stronger. That's the kind of stability and resilience you want in your portfolio, especially if you're an income investor who relies on those dividend checks. Johnson & Johnson is like that reliable old friend who's always there for you, no matter what life throws your way. They're going to keep paying that dividend, they're going to keep raising it, and they're going to keep delivering solid returns for shareholders over the long haul. Now let's talk about a recent development that has me even more bullish on Johnson & Johnson's future, their decision to spin off their consumer health division into a separate publicly traded company. Now some people might see this as a sign of weakness, but I see it as a brilliant strategic move. By separating their consumer health business, which includes those iconic brands I mentioned earlier, from their higher growth pharmaceutical and medical device segments, Johnson & Johnson is unlocking value for shareholders. It allows each division to focus on its own unique strengths and opportunities, and it creates two potentially compelling investment opportunities instead of just one. Think about it, folks. The consumer health business is a cash cow, generating steady, reliable profits year after year. That's great for income investors who are looking for stability and dividends. But the pharmaceutical and medical device businesses are where the real growth potential lies. These are the areas where Johnson & Johnson is investing heavily in research and development, and where they're bringing innovative new products to market that have the potential to transform healthcare. So, what's the bottom line on Johnson & Johnson? This is a company that's got it all: a rock-solid business, a history of dividend growth that's unmatched, and a bright future ahead. They're a true dividend aristocrat, a company that's committed to returning cash to shareholders and building long-term value. Now, I know some of you might be thinking, Jim, this stock is boring, there's not a lot of excitement around it. And you're right, it's not the flashiest stock out there. But you know what? Sometimes, boring is beautiful, especially when it comes to building wealth over the long term. Johnson & Johnson is the kind of stock you can buy and forget about. The kind of stock that will quietly compound your returns year after year, decade after decade. They're the tortoise in the race, not the hare, and in the end, we all know who wins. So don't overlook this dividend-paying behemoth. Add it to your portfolio, sit back, relax, and let those dividends roll in. Alright people, let's talk banks. Not just any bank, we're diving into JPMorgan Chase, the 800-pound gorilla, the king of the financial jungle. JPM, my friends, is a buy for anyone looking for a rock-solid value play in their portfolio. This isn't some fly-by-night fintech startup, this is JPMorgan, a name synonymous with stability and strength in the financial world. Now, I know what you're thinking. Banks? Boring. But let me tell you, boring can be beautiful, especially when it translates to consistent returns. JPM is a money-making machine, firing on all cylinders, and they're not afraid to share the wealth with investors. We're talking about a juicy dividend yield here, folks, something you can rely on, something to build your financial future on. And let's not forget who's at the helm of this behemoth, Jamie Dimon, a captain of industry, a titan of Wall Street. Dimon's leadership has been instrumental in navigating JPM through choppy waters, from the financial crisis to the current economic uncertainty. He's a steady hand on the wheel, and that's exactly what you want in a long-term investment. Now let's talk numbers, because at the end of the day, that's what it's all about, right? JPM is trading at a very reasonable valuation, and that's music to my ears. We're not talking about some overhyped tech darling with a sky-high price tag. This is value investing 101, folks, buying a dollar for 80 cents. JPM's price-to-earnings ratio is sitting pretty below its historical average, which tells me this stock is undervalued, ripe for the picking. The market hasn't fully priced in JPM's earnings potential, and that's where we, the savvy investors, come in. We recognize the opportunity, we seize the day, and we ride that wave of undervaluation all the way to the bank. And speaking of banks, let's not forget the current interest rate environment. The Federal Reserve is raising rates, and that's good news for banks like JPM. Higher rates mean wider net interest margins, which translates to bigger profits. It's a simple equation, folks, but a powerful one. So, when you factor in JPM's attractive valuation, its strong earnings potential, and the tailwind of rising interest rates, it's clear that this stock is a screaming buy. Don't miss out on this opportunity to own a piece of a financial powerhouse. Now let's talk risk management, because that's what separates the wheat from the chaff in the financial world. And let me tell you, JPM is the real deal. They've got more capital buffers than you can shake a stick at, which means they're well equipped to weather any storm. Remember the financial crisis? While other banks were crumbling like a house of cards, JPM stood strong. They learned their lesson from past mistakes and built a fortress balance sheet that's the envy of the industry. This is a bank that's built to last, folks, through thick and thin. And when I see a company with a rock-solid financial foundation, a company that's learned from its past and come out stronger, that's when I know I'm looking at a long-term winner. JPM is the epitome of financial strength, and that's a beautiful, beautiful thing. So if you're worried about market volatility, if you're looking for a safe haven for your hard-earned money, look no further than JPM. This is a stock you can sleep well at night owning, knowing that your investment is in good hands. And let's not forget about those juicy dividends, folks. JPM is a dividend-paying machine, consistently rewarding its shareholders with a steady stream of passive income. That's right, while you're sleeping, JPM is putting money in your pocket. JPM has a long and proud history of dividend growth, and they're showing no signs of slowing down. That's the beauty of owning a stock like JPM. You get both capital appreciation and a growing income stream. It's a win-win. Now some of you young guns might be thinking dividends, that's for retirees. But let me tell you, dividends are the secret sauce to building long-term wealth. Reinvest those dividends, let the power of compounding work its magic, and watch your portfolio grow exponentially over time. So, if you're looking for a stock that can help you achieve your financial goals, a stock that offers both growth potential and a steady income stream, JPM is the answer. Don't wait another minute, folks. Jump on board the JPM train and let's ride this winner all the way to the bank. Let's talk about Apple, folks. Ticker symbol AAPL. This isn't just a company, it's a freaking fortress. They've built an ecosystem so strong it would make Fort Knox blush. iPhones, iPads, Macs, Apple Watch, they've got you hooked, and I'm not even mad. That kind of brand loyalty, that's money in the bank, people. And don't even get me started on their services revenue. Apple Music, Apple Pay, Apple TV Plus, they're firing on all cylinders. This isn't just about gadgets, folks. It's about the ecosystem. It's that seamless integration that keeps customers coming back for more. They buy one Apple product, then another and another. It's like a beautiful, profitable cycle. And the best part? Apple knows how to squeeze every last drop of profit from that ecosystem. They're masters of their domain, and that's why I love them. Now some of you might be thinking, but Jim, Apple is already huge, how much more can they grow? Are you kidding me? This is Apple we're talking about. They're like the freaking Energizer Bunny of tech. They just keep going and going. Look at their financials, people. Apple's been printing money hand over fist, with revenue growth that would make a tech unicorn jealous, and don't forget those dividends, baby. Apple's not just about growth, they're sharing the wealth with us, the loyal shareholders. That dividend keeps growing year after year like a beautiful money-printing tree. Reinvest those dividends, and you're looking at some serious compounding action. This is how you build long-term wealth, folks, with companies that know how to grow and share the spoils. Let's talk about safety, folks, because when you're investing your hard-earned money, you want to know it's in good hands, right? Well, with Apple, you can sleep soundly at night. This company has a balance sheet that would make a bank jealous. We're talking about a mountain of cash, enough to buy a small country. That cash gives Apple incredible flexibility. They can invest in new technologies, buy back their own stock, weather any storm that comes their way. It's like having a giant financial cushion, protecting you from the market's inevitable bumps in the road. And in this market, folks, you need that kind of stability. Bottom line, folks, Apple is the epitome of a buy and hold forever stock. They've got the brand loyalty, the innovation, the growth, the dividends, and the balance sheet to keep winning for years to come. This is a stock you can buy, put away in your portfolio, and forget about for a decade. And when you check back in, you'll be greeted with a fat return on your investment. Now, I'm not saying Apple's stock price won't fluctuate. Of course it will. That's the market for you. But over the long term, this company is destined for greatness. So, do yourself a favor and buy Apple. You won't regret it. Alright folks, let's talk about Warren Buffett, the Oracle of Omaha, the legend himself. And no, I'm not talking about his stock picks this time, though they're usually spot on, gotta give him that. I'm talking about his baby, his masterpiece Berkshire Hathaway, ticker symbol BRK. Now, Berkshire Hathaway isn't your typical stock. It's not a tech giant, it's not a flashy IPO, it's not some meme stock being pumped on Reddit. It's a conglomerate, folks, a collection of amazing businesses, all under one roof. It's like the all-star team of publicly traded companies. We're talking about everything from insurance, Geico, anyone, to railroads, Burlington Northern Santa Fe, choo-choo, to energy, to consumer goods, to freaking candy. See's Candies, folks, the best chocolates you'll ever have. That's the beauty of Berkshire Hathaway. You're not just buying one company, you're buying a piece of dozens of incredible businesses, all carefully selected and managed by Warren Buffett and his team. It's like having your own personal hedge fund, but without the hefty fees. Now, I know what you're thinking, but Jim, Berkshire Hathaway doesn't pay a dividend. Where's my passive income? Listen folks, I love a good dividend stock as much as the next guy, but sometimes you gotta trust the process. And with Berkshire Hathaway, the process is reinvestment. Warren Buffett doesn't believe in sitting on piles of cash. He wants to put that money to work, buying more businesses, expanding existing ones, and compounding those returns year after year. And you know what? His track record speaks for itself. Berkshire Hathaway is a rock, folks, a steady ship in choppy waters. It's not going to give you those wild meme stock swings, but that's not what we're looking for here. We want stability, We want consistent growth, and we want to outperform the market over the long haul. And that's exactly what Berkshire Hathaway delivers. This is a stock you can buy and sleep soundly at night, knowing that your money is in the hands of one of the greatest investors of all time. So, do yourself a favor and add a little bit of Warren Buffett's brilliance to your portfolio with Berkshire Hathaway. Alright folks, we've covered a lot of ground today, from the high-flying growth of Nvidia to the rock-solid stability of Berkshire Hathaway. But the most important takeaway here is this: building long-term wealth with stocks is achievable. It doesn't require a finance degree, it doesn't require insider information, and it doesn't require you to be a day trading maniac glued to your screen 24/7. It requires a plan, folks, a strategy, and the discipline to stick to it through thick and thin. So, diversify across categories, mix those growth stocks with dividend payers and value plays. Think in years, not days, because the magic of compounding takes time. Reinvest those dividends, let your money work for you, and watch your wealth grow steadily over time. Stay informed, keep learning, and don't be afraid to adjust your strategy as needed, because the market is a dynamic beast, always changing, always evolving. But with the right approach and a long-term perspective, you can ride that wave to financial freedom. Remember folks, knowledge is power, and in the stock market, knowledge is your edge. So keep learning, keep investing, and I'll see you at the top. Now go make some money.